For more analysis on this story, we are joined from our Durban studios by Director of Merchant Africa, Advocate Lavan Gopaul. Thank you very much for joining us on PM News, Lavan.
Greetings, Colin. Greetings to all of your viewers.
Well, for any pensioner in the world today, Greece is not the country to be in. Does this country have the money to pay its debtors?
As it stands, the immediate repayment of 1.6 billion euros, which is due quite shortly, it would seem that it's unlikely for Greece to make that repayment. There's also further talk, and various numbers have been put forward, varying from 35 billion euros to 58 billion euros, that Greece is desperately in need of to create jobs, to pay for various services that government is engaged, even to pay for government wage bills. It would seem at this stage that the immediate repayment's not going to happen, and most likely their ability to get further funding is going to be hampered. Some of the comments that we've seen coming out of countries that have been defaulters, a good example being Argentina, who at the turn of the century defaulted on an almost 60 billion euro payment to the I.M.F, has effectively been cut out of the world system in terms of finance. And if Greece were to miss this repayment, they would be put into the shadow. If they were to miss further repayments, in all likelihood, Greece could find it very difficult to get funding on a global scale. This is notwithstanding its status within the EU, as many have speculated. Greece may be one of those stars that fall off the EU flag.
Do you think that Tsipras' government is able to live up to the promise of turning the Greek economy around?
I believe that there may be a long-term solution. Unfortunately, some of the capital requirements are immediate. There's a requirement that they make immediate repayment. You'll also understand that there are some very dire economic aspects, immediate aspects, in terms of the value of Greek paper, which has become worth very little more recently. You've also found that the euro itself has started to become worth less against the US dollar, as many globally contemplate the fact that Greece may fall off, and this may set the precedent for countries like Portugal, Spain, Italy to also be cut out of the EU. So this may be a very dangerous precedent. A number of countries will be watching the Greek referendum to see what the outcome is. But in all likelihood, even the locals voting on the direction that their country should follow will have very little sway if Greece as a country is unable to repay its debt.
Yeah, I mean, I can see citizens are only having a limitation of withdrawing about only 60 euros per day. It means that the citizens are really hard hit by this economic crisis. So now they have to vote on Sunday. Should they, on the referendum, decide whether they vote yes or no? And like you mentioned earlier, it wouldn't have any sway against it. But in practical terms, what would this mean for them?
Well, from the words of some of the European senior members, they've all been asking for a yes vote. In terms of what the Greek individual faces is very little cash in his pocket. They have purposely restricted the currency movement because they are in fear of a run on the banks in Greece. Bear in mind that a number of individuals at this stage are quite desperate, uncertain about the future domestically, as well as uncertain about Greece's place in the European Union. I believe that this discontent on the ground is likely to create quite a valuable vote come the end of the week. For now, we'll have to wait to see what the outcome is. I urge them to vote yes, and I hope that the European Union decides to hold on to Greece as a member state. I also hope that they find sufficient funds to be able to help Greece repay some of its debt. Bear in mind that this isn't a pure business decision, as one would look at corporates deciding whether or not to sell an ailing company. This is an entire country with a number of people's lives and futures to consider. So a bailout for Greece and a continued EU presence would be the perfect solution. Only history will tell.
Okay, Lavan, just before you go, there has been a debate about the desperation of the Greek lending institutions to get their money back from Greece. I mean, aren't they aware of the dire situation that their country is finding itself in? Why so desperate with the deadline to get the money? And why not extend further? Because right now the government is in a crisis. And when we look at the strong points of Greece in as far as economic activity is concerned, which sectors do you think need to be enhanced so that they can bring about more cash flow for the country and to stimulate the economy so that through taxation and through other incomes in various sectors of the economy, they can be able to generate more funding so that they can pay back the loans?
So some of the solutions that we can think of, Colin, let's consider the fact that with respect to Greece as an economy, corporate taxes are already at an acceptable level. If we consider what has happened in terms of business opportunities and employment opportunities, Greece has been more of a holiday destination. They have been quietly selling away islands and bits of coastal property for resorts, and the government's been able to generate income from tourism. They aren't necessarily a manufacturing hub in the European Union. And from a GDP contribution perspective, Greece contributes very little as compared with other countries. And this is on a per capita euro basis. So their status is that of less productive country. The loan that it becomes due, it's important that they make that loan because a chain of events happens if there is a default. We've seen a similar instance when Argentina went through a currency crisis in the late 90s. Money was put up to lend to Argentina to assist them with the concerns that they were going through. It created an upheaval in world markets in the late 90s, and you would have seen markets pull back in 98. That ripple continued for almost 5 years since that point. It would seem that Greece has the potential to disturb world markets. At this stage, interest rates within the Eurozone are being destroyed because of the Greek crisis. The currency is weakening, and you're seeing equity markets fall very sharply in the Eurozone as well as in the US. Emerging markets like South Africa find our interest rates, particularly from an interest rates trading point of view, the bond market disturbs, as well as our currency. And the JSE has also taken a step back in these past few trading days.
All right, Lavan, thank you very much for your insights on the Greek crisis. We're speaking today to Advocate Lavan Gopaul, live from our Durban studios on what happens to be the newsmaker of the week. I believe that it's only Greece. They are holding a referendum on Sunday to decide on whether or not to stay within the Eurozone. We'll see what happens, and we'll keep you up to date when that story develops. And this is PM News. We are about to take a break, but let's look at other stories as well before we do that. A second round of wage talks in the gold